morning, it's Quant Trade Edge, and today I was taking a look at gold. We had this impulse up on the daily chart, and then a 1 bar pullback here. And as you know, yesterday we had a good short in this bar. I believe it hit almost 8x, but definitely got 4. And these are doji bars, so taking out this high gives us our second leg up. So if we take this down to a 15-minute chart, oh, interesting, that trend line held. And let's put our previous day high. And you see that we broke that high early in the overnight session at 6:45 bar. It's roughly Japan's open, 7 p.m. And kind of like when you get hoagies here, you got an inside bar. So that's your entry. In fact, let me just extend it out so you can see that it actually held on this retest down. From here, this was about 3.1. So you got about 2x. Is that right? 2R. Let's see, 3, 6. Yeah, 3, 2.5. And you got a pullback. And for around 3:30 in the morning, European, because European Open would have been 2 up here. So this push down from the European Open, that low still held. So that just gave you another opportunity to get in. It even gave you an opportunity to get in at half. Let's see if it did. Yeah. So you could have even halved your risk if you waited for that entry. Something that works for me is doing half your entry on the original trigger and then 2 times that size at half the risk, which is essentially just the other half of the risk that you would take. And then on times like this, you end up with a much larger position for the same amount of risk. You got to look at your own risk reward and your trade-offs as to how many times these go away from you without giving you that fill. And it's also the time of day you get the initial breakout can also help you make that decision. Here we got the breakout in Asia session. It could have just run up in Asia session, but then European Open is a time when things tend to pull back. Similarly, if you had a entry signal in the early AM when the pit session's open, you would probably get another retest. But typically, once you're into the pit session, if it goes, it's going to go, and you won't get another opportunity. So, just looking at this, 4R takes us to about 2001. Let's draw a rectangle here. I've already done the math on this. That's so that would be our 4R. It hasn't gotten there yet. And this was the other thing notable is this was exact double high, 96.2, 96.2. And to me, an exact double high is going to get broken. I don't believe that there was such an order here at 96.2. When it's an exact number, it really signifies that there's one specific order there, and that one specific order isn't going to take down the whole market. It may get tested again a couple of times, maybe put in a little cup and handle type thing, but I believe that'll go. So looking at a fib extension off of here. Okay, so it's somewhere between the 1.272 and the 1.618, getting 4R. And I just do that to make sure that 4R is reasonable, because 4R is arbitrary. And I just want to make sure that it's also reasonable. If we go back into yesterday, and the 2 trades that I posted in the morning, I'll show you how they got their 8Rs. One of them was in gold, so we can stay on the same chart. Just remove all of this. And I have a new indicator that will change the day's highs so that the carry their history. Okay, so yesterday, this was the reopen. This was the Sunday reopen. We went up here. So we broke previous day low, and then we had our A, B, C. And again, it's on the 15-minute chart because this happened, we got the break at 5 p.m., 6 p.m. happened very early in the evening, so that's not a particularly liquid time to be trading a smaller time frame. And this bar here was 2.2, 85.6. And this all the way down to here, I had calculated it yesterday, it's 7.88 R. So almost 8 R to the low there. And again, you could use VWAP as an indicator here, where once we broke below it, it came back and retested it. We went and hit this low. We spent some time, breaking through it and spending time above it, and it's pretty much stayed above it after that. So in case you missed your exit, keeping an eye on VWAP is a good idea to know that, okay, you missed your exit, just get out now. And then the other market was crude. I believe we're in the January contract now, 15. So yesterday we $75. Yes, okay. So we took out previous day high pretty soon, and this is actually the pullback that gave us our entry. Let me put the Gann counters on it because those are sloppy bars. But this is our leg down. Oops. Trying to get a trend line here. Oh well, we'll just look at it visually. This is our down leg, up leg, down leg, and then we had the inside bar. That was our entry. So let's get a rectangle on it. That's our entry. And you can see how far we went up last night. This was into 12:30, so this is pit session. And from there to there was over 8R. 78.46, 76.49, almost $2, and this was a 25-cent bar. So it's just shy of 8. Just shy of 8R. So that's what we do day in and day out. Look for those breaks of previous day high or previous day low, and then look for the two-legged pullback, and get start documenting all the different types of pullbacks you see. The two-legged ABC pullback is standard. The hoagie is standard. The inside bar that we saw on gold, the first thing that I put up, that's pretty standard. Even within the two-legged pullback, having an inside bar, that's pretty standard. There's maybe half a dozen patterns that you'll see again and again, and just get familiar with those so that in real time you're quick to get on them.